Hey everyone, welcome to Admit Money. This is actually the first time I think I'm recording the podcast without the avatar on. So we're in for a treat because I got my good friend Sergio Silva, who I decided for the last episode of 2022. I asked him to come on as the senior director of Web3 at Fireblocks and the co-founder of NeonDAO. I figured there'd be nobody better to break down the wild ride of this past year. You know, from the merge to the war on Ukraine to FTX. I think we're going to dissect a lot of things that have been happening over the last 365 days. So please welcome Sergio Silva. Hey, Sergio, how are you?
Hey G, thanks for having me. So nice to see your face.
I know,
Or
right?
that
On the
everybody gets to
podcast.
see it. Yeah,
Dude, so how are you? Where are you at the moment? Are you home visiting family?
I'm at my mom's house in northern Mexico. As you can see from the background, she's really into Christmas and books. And so I'm sitting here on her desk. She's actually a bit of an educational TikToker. She's a teacher, so she records videos. And yeah, I'm using her setup today.
Yeah, and I think to start, like I want to go back to like when we first met, which was at the Punks Sotheby's auction in May of last year. And I remember, I think that was, what was that, a day or a week after you quit your job at Barclays? It was
Yeah,
like
so
right
it's actually
around then,
Christie's.
right?
It's actually
Yeah.
Christie's, which is
Oh,
down the
Christie's,
street
yeah,
from
sorry. Yeah,
Barclays.
yeah.
Yeah, so I had just I've been a couple of weeks that I gave notice. They asked me to stay to help with the transition, and Christie's was doing its first ever punks auction. They had just come off the Beeple $69 million auction. Pack was scheduled to be at Sotheby's, or had just been at Sotheby's. Mad Dog Jones at Phillips. So it's one of those exciting times where like we're thinking mainstream traditional art adoption. Here we go. Showed up to Christie's, a bunch of humans who I had no idea who they were. They just, you don't know who's going to be there. And I think it was the first time that I realized, hey, I actually don't know what my internet friends look like.
Yeah, and I remember we started chatting because as we were walking through that tour, and then we just kind of hit it off because we both had our traditional finance background, and you know, you were just leaving Barclays. I'm like, yep, I had a very similar journey, even though I didn't work at a bank. It was just, you know, one of those things where it's like this just makes sense. This is the future, right? And I think that that's really where our friendship initially started, and you know, we've been in. Down the rabbit hole, I think, on this wild ride together. And it's always good because like sometimes like I feel like we'll gut check each other every once in a while. We'll be like, yo, like what do you think of this, right? Like what, like this trend, right? Like macro wise, because I think a lot of times in the NFT space it gets, the macro kind of gets lost for the micro. And so I always like kind of bouncing ideas off you back and forth, just knowing kind of where your head's at and where you, what you were doing before this.
Oh, likewise, and I appreciate the friendship over the last, what's been 18 months. Maybe your audience doesn't know, but I've said in a few podcasts and interviews. Actually, the reason why I found Punks was because the Defiant wrote an article about you buying your ape, and that's what caught my attention, and that's how I ended up down that rabbit hole. So after an hour at Christie's hanging out, realizing we have the Latino background, the traditional finance background, finally like what's your name? And you said I'm G Money, and I was like, what? It was really really fun, and it's amazing to have that kind of connection in the space. I think one of the things we've all realized as we've gone through this experience is that it's really about people say the community, and what composes community is the people behind the avatar. So it's been an amazing experience for sure.
Yeah, for sure. And you know, it's funny because as I'm thinking about, you know, in preparing for this, as I was thinking about like what has the last year been like, and I remember specifically, I specifically remember Art Basel last year. That was literally the top, and like we were there. You know, ETH is above like maybe 4,500 at that point. And I remember I was out one night and like ETH dropped like, you know, somewhere like 5 or 10%, and people were like, yeah, like buy the dip. And you know, I was in that included, right? And here we are a year later where ETH is down, you know, 70+% from the highs, and being like, oh wow, like a lot of shit has happened in the last year. um I would say, I what do you think is the most significant event that happened this year in your opinion?
Wow, crypto, NFTs, macro.
I'd say it, let's say with crypto, let's say crypto, macro crypto.
Yeah, I think the realization that adoption curves and price curves follow different patterns. What I mean that, as you're saying, late last year, probably we had the most amount of people looking at crypto, looking at NFTs, and you would have expected that price to follow into this year. The reality is, as you know, markets tend to be efficient, and so they sniff out that future and what that might look like. And so the fact that the price completely went against what we thought was, broader adoption and the birth of so many new use cases that we're seeing today. And this was on the back of obviously macro things happening and the Russian and Ukraine war and everything else. I think that's the biggest thing. It's just the fact that crypto got so large that it's now also a macro product in a way, and that we've learned to kind of almost respect that and have to look outside our little bubble. And I think one of the benefits of becoming more mainstream, seeing crypto on the Wall Street Journal and on CNBC and on Bloomberg, also means that we're going to start seeing higher correlations to some of the things that more closely resemble it, like tech stocks and new companies, new technology, and the like.
Yeah, I agree with you, right? I think, and this is something that I always spoke about, right? And like the reason why I really liked NFTs when I got into them is that, in a zero interest rate environment, right? Like find the thing that has the most convexity, right? Find the thing that's going to move the most with the least amount of incremental dollars, right? And so it's like find a market that was liquid enough, that was large enough to get a position in, that if it was going to increase, you would be rewarded nicely for that. And that's initially what drove me into the NFT space. But I think as I've seen it mature, right, it's interesting, right, because you're still here, right? I'm still here. And we're obviously, price, I think, matters to a certain extent, because I don't think anybody would have spoken. We wouldn't be talking about NFTs right now if they didn't have the 2021 that they did, right? The whole reason why people know what NFTs are in general is because of the price action that, the wild speculation that ended up happening and the incredible price moves both to the upside and to the downside. But I do think, to your point, right, is like the macro really impacts everything, right? And I think it's funny because as, sometimes I go through when I'm scrolling through NFT Twitter, and like people that probably otherwise would have had no idea about macroeconomics and interest rates and like the Fed are now like experts in like, like 7 out of the last 9 times CPI is printed, blah, 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 like that has led to this. And it's always funny, but I'm like, well, at the very least, like people are a little more financially literate, right? That otherwise probably wouldn't have cared about, macroeconomic policy before,
No,
which I think is
100%.
really incredible. Yeah.
It's so good to see too, people really like going and educating themselves. I think, people point their fingers at the macro this year that everything's down, not just crypto, but pretty much every market. The reality is macro was also the reason why we giga pumped in 2020 and 2021, right? Like people just being stuck at home, a lot of governments just printing out free money, handing it out, mailing it out in checks and the like. And so it went both ways. Obviously, in bull markets, everybody thinks they're a genius. Bear markets, that's really when you find out who's been swimming naked or just were going along for the ride without knowing. So it's been super interesting. It's been great to see because at the end of the day, one of the big crypto things with DeFi, for example, is being able to democratize finance. And whether we like it or not, the exercises that we're going through today, the 10,000, 2 million people left on crypto Twitter and the like, are really going through a stage where they're actually having to go out and learn about not just macro, but also micro. Obviously, as they're building out projects and different things, doing their own research, they're coming to find out that the economics matter, supply, demand, price, and everything. And so it's been really good to see in that sense. Hopefully, folks don't lose too much money, but I think it's also all part of the game.
Yeah, no, I totally agree. And I think it's funny because I think we've seen that maturing of the industry to some extent, right? And I will say, like, I always commend you for being kind of like that voice of reason, right? Where, I mean, I remember, I don't remember exactly how long ago, but you were like, I think ETH was at like 17 or 1800 and you were like, it's going lower, so be prepared for it, right? And that was at a time when people were like, oh, this is the bottom. And, you know, even more recently with you buying some ape coin, right? Like purely like as a trade, like forget what you think about like apes as an ecosystem or whatever. It's just purely as a trade. And like I respect that, because like at the end of the day, like that's our background. You know, like I definitely don't trade nearly as much as I used to. I don't think you do either, but at the end of the day, like sometimes if there's price dislocation, you're like, all right, well, you know, here's the setup. And I know I was in a couple group chats and I saw your tweets about it, about like your thesis, right? Like as a trader, right? Like I never would necessarily write like papers. Like I wouldn't write a dissertation on why I was taking a trade. It would be like, well, here's like my 5 bullet points of why this would work. And like, you know, here's some cons why it might not work, but like I'm putting on the trade and this is what I'm risking and this is what I expect to make, right? So I always appreciate you like sharing those thoughts, because I think it helps educate people at the same time as well, right? Of like, what does the thought process look like going into it, and not just like, I like the art and so like I'm buying it, right? Because there's a lot more that goes into decision making behind being successful and profitable in not just NFTs, just in general.
No, thanks. I appreciate that. Yeah, I think, you know, we're all here to make ourselves better in a way. For some people, that's just profit maxis and they're in and out stuff. For some other people, they're building things like you have over the last 2 years with Admit One and you know, the branding around your punk and everything else. And for some of us, it's just a combination of things. And so to the degree that I can use my previous experience to help others and also take back from, you know, crypto Twitter, NFT Twitter, and learn from them. For example, you know, I'm not a gamer. I've never been a gamer, and I've learned so much from people who have that gaming background and understand the, you know, economics and everything behind it. So it's an incredible space in that it's so small and so cliche, but so early that we can all, you know, pass around that level of like information and help each other learn and get better and grow and hopefully make a ton of money. Why not?
Exactly. Let's talk about, I guess, 2022. And I guess, what were some trends that you witnessed? What do you think was the most underrated trend that you witnessed in 2022 in the NFT space?
Yeah, I think, you know, the fact that we were too hyped up, like we were at the top of the bubble, really blinded people to the reality, right? I remember seeing a lot of, you know, there's really smart people with like statistics and stuff on Twitter saying, hey, there's 200,000 wallets interacting with NFTs. And, you know, every collection was minting out 10,000. So you start thinking, well, if this is going to grow and there's only 200,000 people and every collection has 10K, it really starts to get very, very thin. And I think, you know, underrated is a difficult word, especially in a space that continues to go exponential and will continue to do so as we go through time. But I do think kind of being a little bit more mature and being more cautious was something that was very well rewarded as we look back through the year. I think going into the year saying, hey, let's take a pause and let's really think about this. I think it would have helped a lot more people survive the year a little better, or even, you know, put on profitable shorts or hedges, which is something that it's hard to do when it feels like the FOMO is just driving you to continue buying, and, you know, we're all going to make it, and posting videos of, you know, music and songs that are all about, you know, going to the moon and the like. So I think underrated balance, I would say that's the word that I'm looking for. Really being balanced in the approach, making sure that you leave yourself some room for capturing that convexity that you highlighted, while at the same time, you know, grounding yourself and saying, this is why this makes sense or doesn't make sense, and being happy with passing on things.
Right. Yeah, I think it's interesting. Like when I think of like what I think was most underrated that I probably didn't expect was for the NFT market to hold up as well as it has held up at the high end, right? Especially with like over leverage in terms of like every fund that we thought were the smartest guys in the room blowing up before our eyes, and being like, you know, I'm like, whoa, like, you know, I don't check the Punk's floor every day. And then like, you know, randomly like logging in on like the end of November, being like, oh, I wonder what Punks are doing. I'm like, oh shit, like the floor stayed pretty constant, despite the fact that there's been a ton of leverage leaving the system. And I think that's probably just a function of the fact that there isn't much leverage in NFTs at the moment. And I don't know if that continues, right? Like I think next bull run will probably see a lot more leverage in the NFT space. So I don't even know if NFTs will be quote unquote as good of a store of value going forward. But I thought that, to me, that was like an underrated trend that I didn't expect to see. It's like, if you told me that ETH was going to pull back 70% over the course of a year, I'd be like, yeah, like I'd expect your blue chip assets to still be higher than where they were at the end of 2020. But I don't think that I wouldn't have guessed that the punk floor would have been here if you told me what ETH was going to do over the next, you know, year, right? Which I think has been really interesting. It was a pleasant surprise to me. I'm not sure what did you think about that? I guess like NFT carnage compared to like if crypto was going to pull back.
I think you're starting to see that divergence between kind of like the NFT assets as cultural capital and a new paradigm, and then crypto as being the currency in which they're denominated. So for me, I think NFTs have always been priced in dollars. Um, in the back of people's minds, I think obviously there's a lot of folks and funds that have ETH and they got it really, really cheap. So for them to price in ETH terms makes a lot of sense. But if you really chart NFTs in dollar terms, I think you can see that cycle a little bit better. And I think most of the new entrants came in with dollars. And so until you can pay your mortgage, your car payment, or you collect your salary in Ether or other crypto, I think that it's hard to really make the case that NFTs are fully priced in Ether or Matic or wherever it might be. So that was interesting in that sense, but I agree with you. I mean, it's crazy that punks are $80,000 floor. I think when you bought your ape, I think the punk floor was something closer to about 2 Ether, which is what, like $3,000 at the time. So the fact that we're still up, multiples of that in dollar terms and also Ether terms, I think it's been very, very impressive to watch, and also speaks to the quality of the projects that have held up that way. Right, not just punks, but obviously a lot of the early art blocks and even some of the more hyped up projects that came throughout 2021 that are still holding up pretty high Ether values versus mint price. It's impressive, and it really speaks to the fact that NFTs are the future of culture, among other things.
Right. And I think you bring up an interesting point there that I want to delve into a little bit, because I spend a lot of time thinking about this where, okay, we've had this massive pullback in asset prices across the globe. NFT is obviously not immune from that. We've pulled back a lot, but still at the end of the day, when you compare like let's say the 2 year price difference, right, of NFTs, and in your example, CryptoPunks, where like when I bought it, the floor was somewhere between like $1,000, $3,000, and now the floor is, what is that, 20 times, 30 times bigger, right? And it's like, holy shit, like this kind of has proven to be kind of like a hedge against inflation. Now, is it on the time frame that people expected, right? Where right now you have CPI peaking or, way higher than it was before, and you have asset prices coming back because the Fed is actually fighting inflation. But like on a 2 year stack, like the right NFTs have proved to be like good inflation hedges, right? And crypto in general, right? Because like even if you look at the price of Ethereum, and even the price of, I don't know where Bitcoin was off the top of my head 2 years ago, but the price of Ethereum 2 years ago was like 550, right? 500-ish, I remember, around there. And it's still up 100% over a 2 year basis. It just pulled back, right? So like, even though there has been a lot of pain, if like I fell asleep on December 21st of 2020, of 2020, and I woke up today, 2 years later, I would be like, oh shit, like I did pretty good, not realizing like the fluctuations that have happened in between.
Yeah, it's that path dependency that makes or breaks traders. I think that's the difference between a lot of the folks that really focus on the short term, and then people more like yourself who are thinking about the next 5-10 years, and then everybody in between. So it really is that path dependency that it's going to determine, I guess, the way that your returns look. And that's why I think people should really make an effort to think from the beginning. This funds, this investment that I'm making, is it a 10-year investment and will like DCA through time? For example, a DC investor, right? Like he has almost become the face of just being really, really, sober about getting excited about things pumping, and remaining that same way when things really drop a lot and just accumulating through time, versus some of like more of the hypey traders, some of which were very, very famous and then blew up this year just because they got caught at the wrong time. So, the crypto space, the NFT space is so small that we still kind of like know everybody. But if you start thinking about what that will look like in 10 years when the market has grown to more traditional finance size, The equity guys don't know, too many of the credit guys. They don't know too many of like the macro guys. Like it's just becomes so big that you start kind of like losing that ability to look at every single corner. Where in crypto, we still kind of like see the DeFi guys, the pure protocol guys, the NFT girls, and everything in between. So I think this is a moment to really enjoy being here, being in the space, and being able to take from everything and learn. Like, this is what I want to do. This is what I want to chase, and make that decision for the next 5, 10 years, which is really when you're going to collect your payout.
Right. Yeah, no, I agree with that. It's been like I think it's been a learning experience for a lot of people this year, which has been good, right? Which is hopefully we can grow from here. I guess with that, like I wanna what was your biggest, what did you say your biggest mistake was of 2022? Like, what do you think your biggest learning experience was?
Yeah,
I'll
so I
start with
think my
mine.
big
I'll
okay.
start with mine. Is I don't think I hedged out enough, right? Like I sold some stuff, but I should have, and I think part of it is because maybe I'm sitting there and I'm like, oh, I don't want to sell this. Like there were things that I knew I'm like, all right, but like, I don't want to sell it here because what if it keeps going higher? Meanwhile, like I've experienced a huge return, like very quickly, and I'm just like, oh well, I think 10 years from now, it's going to be significantly higher, and just being like not realizing it's like, yeah, like I could sell it here and buy back everything and more, like at a lower price if I wanted to, and just kind of maybe leaning into the fact that I wasn't trading anymore. I think that was my biggest learning lesson for this year, is that like I think at the end of the day, especially when you have inflation running so wild, you have central banks that have turned everybody into a like everybody's short rates, right? Everybody's been short rates for the last 20 plus years. And it's like you have to realize that once that regime change starts to happen, you also have to balance your portfolio accordingly. And I think that was the mistake that I made, is that I was just like, oh yeah, like I can withstand a 50% drawdown, and like forgetting like how, it's like, well, I'm not levered, so like it won't hurt as much, but like no matter what, it always hurts. And I think that was my biggest learning from 2022.
Yeah, I think most people would tell you that's probably 2020 hindsight. They would have sold their apes at 500 and punks at whatever they were at the beginning of the year, 300K, coming off like a $500,000 floor in September of the year prior. For me, I think obviously we'll love to go back and do that. I was bearish spot going into this year just for the reasons that you flag, and I sold 95% of my spot exposure. But I decided to kind of keep what I called a barbell portfolio. So I had stable coins on one end and then JPEGs on the other, kind of hoping to capture the convexity if it kept on going up, and making sure it was protected on the spot price. And the mistake that I made there was not realizing how high the correlation was going to be on the way down as well between spot prices and the JPEGs. Thinking in dollar terms, I think my JPEGs in ETH terms held up pretty well, but it was that again, when I look at, hey, I want to go buy a house or I want to go buy a car or whatever, it's like, oh shit, yeah, well, 50 ether is no longer $200,000, and
Right.
I think for me that, and then just timing, I had some right trades, and I just either overstayed my welcome or didn't wait long enough to really profit from them. The combination of both, looking back at the year, that's what I'm trying to change for next year.
How's the ApeCoin trade? Where you at on that right now?
It's going well. So I took some profits on that initial pump, which was part of the thesis, right? People are going to say, wow, 200, 300,000 APY makes sense for you to like maybe have some on. It didn't, like, the liquidity is not that high, so you just needed enough players to come in, and it ended up pumping to like 450 a couple of times, so it gave some room for profit taking. And then I'm staking some ETHs and have the ApeCoin with it. My entry level was around 325-ish on Thanksgiving weekend. So it's still pretty comfy. It was like 350 last. Obviously, again, right? Could have sold it at 440. Could have made a lot more money that I'm probably going to make if it stays at this level from here till the end of the first quarter of staking. But also just thinking of probabilities, I think Yuga will continue to provide some sort of utility to ApeCoin. Also keeps me engaged in that ecosystem. It's not a big stack anymore, and so it's a good way to kind of just stay on top of things. And we saw yesterday with whatever Gmae trial they're doing, there'll be some kind of like ape angle to it. So it's going well. best return would have been just to sell everything at the top, but at the time you don't know that's the top. So I think
Right.
you just want to really kind of like almost broaden your distribution curve, trying to hit it to the right side, and reassess as you go through time. Right now I feel pretty comfy, collecting almost a couple $100 every few hours from the staking. Not too bad.
What do you think of the new announcement that came out yesterday?
So it was very interesting to see the kennels pump so much. The kennels, which obviously had no royalties up until, again, I guess today they turned them back on. They become kind of like a accelerator in the ecosystem for both apes and mutants. They were always, to me, like almost like an afterthought. So the fact that they are pumping so hard, I think, is very telling. I don't have too much insight into like the lore and everything of the ape community or the ape project overall. I think it's super interesting that Yuga has been using like all the different elements, their ecosystem, to deliver value. So it gives me a lot of promise for things that are dear to my heart, which are the Meebits, the original stablecoins of the metaverse at like 2.5 for Ether. Now punks have
Man,
joined.
I was waiting. I had a counter going on for this and one more topic to see how long we could go without talking about them. So we hit the Meebits counter. We have one more counter to hit. So I'm sure you know which one it is, but I'm gonna try to push it off as long as we can.
Sounds good. Yeah, no, I love the Meebits. I think they're beautiful. I think they're very, very early and ahead of their time. I'm excited for what you guys are gonna do with them. I think again, looking at what they've been able to accomplish with apes, mutant dogs, ApeCoin, I'll be foolish to fade that. They are now again the cheapest entry into the ecosystem. So I think it's just a matter of time. I think it's just a matter of time and making sure that, again, you take advantage of the lulls in the market to build backs, accumulate, wait for your thesis to play out. And then, hopefully when that does happen, you're able to have also, I guess, the ability to say, okay, my thesis has played out. I am going to cash out. I'm going to take some profits. Or if the thesis really changed, the ability to say, okay, this is why it changed. But if not, just going in with a plan, I think it's 80% of the time you're probably better off than just winging it every single time.
Yeah, and I think you bring up a valid thing that you kind of went over, and I saw that this morning. Gordon or somebody else that tweeted, should we turn back royalties on the kennels? And I was like, oh, I'm like, that's interesting. And I know you have some thoughts on royalties. I have my thoughts on royalties. What are your thoughts on them turning royalties back on after having them off for a while?
I think it's interesting because let's face it, right? PFPs, nobody's paying royalties anymore. Especially using some of those marketplaces that popped up where there are for traders. I think the royalty model as kind of like this is the way we're going to build our business for PFP projects is probably about to expire. I think royalties for artists are great. I think they really encourage alignment. It's a good way of almost kind of like giving back and making sure you stay kind of like always thinking about the future together as a collector and an artist. For PFPs, obviously they were benefited by the gigantic bubble that we saw last year, and to project that forward is probably a bit foolish. So while I really don't have any specific opinion, I think most of the traders that are buying and selling kennels today are probably doing so without royalties. I think it was NFT Statistics. They had a tweet out a couple of weeks ago about the effective royalty rate on Bored Ape trades was like 1% or even lower than that. I think again, it's a community that's very focused on trading and the floor price. So of course, that's going to drive towards these kinds of marketplaces. I don't know how much you're going to be able to collect from turning on royalties, but I think it does send a signal saying, hey, we're paying attention. We want to make sure that we're able to monetize our creations. How do we do that? By hopefully delivering value. So it just says, hey, we're going to continue working. I think that's a net positive for the space.
So yeah, I mean, along those lines, because I think about this a lot with 90cc and Admit One, is like, okay, like I am a proponent for creator royalties, but I also think that you shouldn't be blocked, right? So like I don't really like the OpenSea blocking of marketplaces, right? Because ultimately, like, there's workarounds for that regardless. And it's like if you bought an asset, you want to say you own that asset, right? Like you can't say like, well, you own that asset as long as you trade it like here, right? Like you don't buy a T-shirt and say, well, you only own that T-shirt in the state of New York, but you don't own it in the state of New Jersey, right? Like that to me is like I very much am like, yes, you should have sovereignty over your assets, but I also think that as I think a lot about this, is that you should lead with the carrot and not with the stick, right? And so it's like you should incentivize people to want to pay those royalties if they wish to be part of the community, right? And they wish to, like for I think something as easily with what Yuga's doing, where it's like, yeah, like guess what? If you bought uh an ape, the doggo without royalties, then like you can't use that to like power up your mutant ape or your bored ape, right? And then all of a sudden you have people that want to pay royalties because they want to get access to it. It's your own asset. If you're like, well, I only want to trade it and you can buy and sell it, then sure, you can go on those marketplaces that don't pay royalties. But if you want to be like a contributing member of the ecosystem that gets access to stuff where, Ape Fest or, the airdrop rewards or all these things, like you're gonna have to pay royalties, right? And I think that what we're ultimately going to go towards is this system where sure that asset could be traded, let's call it black market, that for just easy naming terms, right? Where you can pay it, you can you can play the price appreciation in a royalty free way, but then if maybe I buy it and then like I pay like the foregone royalties or however it is that you structure it to enter back into the system, then it can come back into the system and now be like a reward bearing asset. Like I think that that's probably where we go long term, because to your point is like there's projects that people trade, right? Like that people are just like, I don't care, it's just like there's a lot of liquidity and people are trading and I'm gonna pump and dump them or whatever, right? But then there's other projects where, and I think Bored Apes and Yuga has done a good job at creating this ecosystem around their actual assets where people are gonna be like, well, if I trade this without a royalty, then like I don't get access to Ape Fest, right? And it's like,
Yeah,
and from Yuga's perspective, why should they provide access to incentives and rewards for people that are not paying the royalty rate, right? Like that. I mean, that's my opinion on it.
I agree with you. I think, limiting where you can trade your token just completely goes against the ethos of the space. I saw it with the Nifty Gateway bubble, where a lot of the artists that came in were just trying to cash in on the hype, and those artists are now long gone. I think projects that choose to go that way, kind of like away from the ethos of crypto, will probably suffer the same long term, kind of like not consequence, but I just think they're not here for the right things. And so it's part of the game, right? You come to crypto, you come to this space where it's all about self sovereignty and being able to fully own your assets without anybody in the middle telling you what you can or can't do. And you should respect that. So I agree with you. I think that creators, artists, project sponsors were a little bit, let's say, spoiled. Although I don't mean that in a negative way, but they took full advantage of this bubble, and some of them were able to amass amazing treasuries and raise funds from investors and the like, create large communities and able to finance events and different perks for them. But obviously those times are gone. So I think the fact that these businesses have to evolve is not a negative thing, but a positive thing. Just like social media evolved from MySpace and High Five and even just like MSN Messenger to what it became, like it's just part of natural, technological and human evolution. And so projects need to evolve, maybe a subscription model like the one you are almost describing, right? It's kind of like you pay to be a part of it, you pay to kind of like get the rewards that are accruing as you go through time, is the right way forward. I don't have the answer. I think, again, going back to the fact that the NFT space is so small that everything gets bunched together, PFPs, art, memberships, tickets, all these different things. We will have different answers for the different categories. But I do think the ethos of crypto should be respected if we're using the crypto rails to power up this networks and these communities.
Yeah, I agree. I think ultimately, fundamentally, like you have to stay core to the core ethos of crypto and work within that framework. And it's like if you're a creator, then you want to incentivize people without necessarily having to be like, this is the law, to be like, hey, like I want, like I mean, like even just me, like as a community owner, community creator, like I want people that want to be part of the community. Like I want
Right.
people that are like, yeah, like I want to be part of this, not where it's like, what are you doing to pump the price of my token? It's like, dude, like I mean sell it. Like if like, and that's been my response where people are like, well, how are you going to pump the price of this? When are you going to drop a PFP? I'm like, if you're waiting for that, like please sell it. Like I don't want you to be part of this community. And if that drives down the price, then that's fine. There'll be like a clearing price where people that are like, oh well, I want to be a part of this community. I want to do something with this. That I think ultimately that's what you want as a community owner and a member anyway. You mentioned something interesting, like a lot of people were coming in during the bull, sucking liquidity out of the market. Like who do you think was not the worst perpetrator of it, right? Like who do you think did it? At a like I have I'll go first. I think Pac rugged the community of so much money, and like to sit there and like literally with everything that they did, it like to me is like a joke of like why people even still collect Pac. Like whenever I'm in a chat or somebody's like, oh, like in Pac, I'm like, dude, this is laughable because he has taken so much money out of the community and just like walked away. I think them and Kevin's is probably whatever project was, Pixelmons is if that's what it was. I think those, to me, I think that those were like the two most flagrant abusers of the bull market of the last run. I want to know if you had any opinions on who might have been up there.
Yeah, no, I think, those were the high profile ones. Impact did deliver a ton of value first and then used that to suck a lot more liquidity out. And I think that gave them an opportunity to achieve that liquidity pool. I think it's actually like the smaller projects that you and I probably didn't hear about, but that came in, got people hyped up, new entrants hyped up, that kind of almost made them believe they'll be the next punks, the next apes, this and that. And in the aggregate, really took away that marginal new entrant because their first experience was with some of like, I don't even remember the names. There were so many of those little projects, minted out, rug pulled, and they did it and did it again. The fact that we remember, Pixelmons and packs, just tells me that these little, rug pull projects were super successful because they never faced any consequences. They came back and kept doing it. And they really took away, kind of like the people that maybe you and I onboarded and then on their own free time went and try to buy something and mint something and just let themselves kind of like just go along with the hype. And so to me, that was actually one of the biggest things last year, like not being able to educate more people and really help them to think, hey, really focus on what you're doing, figure out who's behind this, and just make sure that you're being careful. But if you want me to give you like a big name, I want to say, as far as one big project that rug pull, I think it was Mechaverse.
Yeah.
I remember perfectly how they were able to manufacture hype and FOMO. And then
I think they were like one of the first projects that had you grind on Discord, right? Where it's like to get on the allow list, like you have to do like a million things or something. I remember hearing about it.
I wasn't involved. I just like watched from a distance. I remember they got to like 8 ETH per reveal, and this was like $30,000 at the time. And again, you take a step back and you think, okay, why does this warrant $30,000 of people's money? Like that was a small car at the time, right? Like that's like, I mean, my mom's house in Mexico is probably worth that, to be honest, right? Like why is that? And so, yeah, that project to me was, I think, when we really started to see the cracks in the hype bubble.
Right. Yeah, I that makes sense. That was that in 2021 or 2022? I don't even know at this point. To me, I feel like that my years.
It's like the last 18 months are like 1 year to me.
It's all like squished. I'm like,
yeah.
Even like earlier, I'm like, is that 2021 or 2020? I don't even know. I want to start talking about the like outlooks for next year in a second, but I want to kind of go over is like, I mean, we have so many things that we could talk about from a macro level, from like the war on the Ukraine, the pivot in rates towards actually raising rates, the 3AC, the Luna blow up, right? And then FTX blowing up. I mean, what do you want to talk about? I think like real quickly before we start thinking about like the future here. I there's so much to talk about there. I think I've been personally fascinated with this entire FTX situation. Like as it was happening in real time, especially like last month, I couldn't stop. I couldn't take my eyes off the screen of being like, "Are you fucking kidding me?" Like just every like piece that got unraveled more and more. I was just, I'm still dumbfounded by it of like how he was able to manage this massive Ponzi, and how he was able to fleece so many smart people. Like if you look at that cap table, and I know people have been going after like the celebrities and stuff like that for like endorsing it, but I'm like, dude, like if you showed me that cap table and was like, yeah, these guys want to do like they want you to be a spokesperson, I'd be like, yeah, sure, like where do I sign, right? Like these are literally some of the smartest investors on the planet. What are your thoughts on FTX, this whole thing unraveling? How do you think he was able to do it? Like that, I think that to me is like my first question that I always ask myself is like, how was he able to do this?
You know, you mentioned the other blowups in the year, and I think FTX is also part of this. The cult of personality, which is something that we see in crypto a lot, right? It's like people think there's like this godlike figures and they follow them, they never question them. Usually a lot easier when they make the number go up. And I think it's very pervasive. I think it's also a big part of human nature. I mean, we see it with global religions, right? They usually require like worshiping of one entity or individual. And so not just FTX, not just, you know, Luna, but also 3AC. I mean, it was two dudes there, but
But
at the same time,
also, but to your point, right? Like it doesn't just happen in crypto, right? Because we see it happen, you know, Zuckerberg, Bezos, Musk, right? Like these are just three people off the top of my head that are like, yeah, there is that cult of personality where people are like, yeah, these people can do no wrong. Like they're, you know, the smartest people in the room. It's interesting, right? Because it's playing out so frequently in the crypto world as opposed to like the legacy world.
yeah, I think, you know, crypto just accelerates everything, right? Just the fact that it's 24/7 and global and really decentralized in that there's nobody in the middle telling you yes or no. And I think I've said it before, you know, really technology enhances human nature. And so that's why so many of these things happen in crypto, because it gives you the ability to almost like stake or invest in those people in one way or another, right? Like a investor in Australia will be have a hard time buying like Tesla stock directly, but you can go and buy FTT tokens or Luna, you know, on your crypto app at any time in the day. And so I think that's why crypto accentuates it. More specifically, FTX. I mean, I was perplexed too. I mean, I think it caught everybody by surprise in that, you know, it really seemed that they had figured out, and by they I mean FTX. Obviously, SBF was at the top, but you can pull off a scam or a Ponzi of that size without some help, right? Whether it's willingly or unwillingly, there's a team behind them or with him that pulled this off. And so it's just very sad because it's brought a spotlight into crypto that we definitely, you know, I don't want to say we didn't need, because we definitely do need to clean up the space, and we need to make sure that crypto and blockchain is not a dangerous spot, especially for amateurs, especially for newbies, especially for people that might not have the backgrounds that you and I have in like traditional finance and understanding the risks of different things. And it was just wild to watch it, and it was wild to watch it happening on Twitter, and like, to see
Yeah,
so many
as
different players
opposed,
come in.
dude, as opposed to like mainstream media, like the thing that blew my mind was once it started unraveling, like the first piece from the New York Times was a puff piece, right? And then the Washington Post, I think, was the second piece, and that was like another puff piece. And I was like, oh my God, like you want to talk about like the bull case for Twitter. The fact of the matter was that like shit was breaking on Twitter, and like people were actually like coming out with facts and not like, oh well, like he was a donor to like our owner's political party. It was blowing my mind. It was blowing my mind just
Yeah,
watching this unravel in real time.
but even before that, right? Like the Caroline tags, even Sam's tags, ZC tags, like the whole thing went down in front of our eyes. I keep thinking of kind of like the financial crisis and Lehman Brothers and those images of people, walking out of the Lehman offices on that Sunday night in September of, what was it, 2008. And you kind of just had to wait for the information to come out. You had no idea what was going on. Once I came into the industry, I found out that other banks were sending lawyers to like execute like different trades directly on paper outside the offices, and it's a crazy thing. But that information was held by maybe 100 200 people in the world, um, as versus this today, and even like the Luna stuff, where we're all on Twitter and kind of like seeing it play out, directly, tweet by tweet. And so it was super, super interesting. Sad, terrible that there's people like that in the space. I think, again, I don't think it's just a crypto thing. We saw it with Enron, we saw it with Theranos. We see, again, we see the big ones, but there's also little ones that happen all the freaking time, right? That's why we have
Yeah.
such a large law enforcement efforts in almost every country. But it's sad, and I really hope that it helps people understand two main things. One, really counterparty risk, especially in an industry where you have no recourse, right? You send stable coins or Bitcoin to a wallet. That's it. There's nobody you can call to get that back. So really understanding your counterparty risk, not just as a retail investor, but also institutionals, right? Making sure that, okay, who am I doing business here with? And then two, self-custody and the ability to say, hey, I own these assets, I'm responsible for them. Let me take advantage of that. Comes with its own challenges, of course. But hopefully this spotlight that we're getting in the industry because of what Sam and those bad people did this year, we can use that energy and channel it towards helping more and more people on-ramp the right way and understand counterparty risk and the power of self-custody.
Yeah, no, I agree. And I think like I'm gonna knock on wood because I like was thinking about this like a week or two ago that I'm like, dude, I don't know, like because of self custody, like I know how. Because of self custody, I managed to escape like the 3AC blow up, the Luna blow up, and the FTX blow up, right? And I had friends that, some friends got caught in Luna, or some friends was okay through Luna, but then they got caught in FTX. And like, again, like as I sit back and I think about this entire FTX situation, there's like a couple things that come to mind. One is like, what was it about that? Like Sam is obviously really fucking smart, right? Like he was able to kind of perpetuate this lie and like have people at the highest levels like believe him, and they're like, yeah, well, this kid is maybe like so autistic that he's definitely smarter than us, right? Like he's definitely that guy that's like gonna run circles around us. So like let's give him our money because we've been growing hand over fist. And like it's like, and I know like even as like I remember that weekend going into the blow up, as like I was talking to friends and people were like, yeah, like Sam is definitely the safest guy in crypto. Like he's definitely the safest guy. I'm not pulling my money out. And those people like, they were in stables, right? They were like farming tokens in stables and being like, dude, they're like, I cashed out near the top. I rode the cycle perfectly only to get blown up in literally like non-self like custodying, trusting somebody else, not your keys, not your wallet, which was crazy, right? Because he was able to be this charlatan that like kind of like gave people this sense of security, right? Because you're like, oh, this guy's so fucking smart, right? Which again, and that perpetuates kind of like one of the things that always comes back to my head is I know somebody wrote this thesis on Twitter. I haven't really seen anybody else really follow up with it, where it's like, maybe he wasn't as smart as we thought, right? Like we always were like, oh, he's this genius market maker that came from Jane Street and he was like a Wall Street whiz kid and now he's a crypto whiz kid. But maybe he just wasn't as good, right? And like that theory was basically that like, they started FTX to get access to like the fact that he had access to order flow, he had access to customers' funds, he had every edge that you could ask for as a market maker, and still wasn't able to make money. Means he wasn't as good as we thought he was, right? But he was able to perpetuate that lie through continuously fundraising and posting false profits or whatever whatever it is that he's falsifying. But like that to me is just like, it's just wild, right? It's just so wild. To your point of like the cult of personality, where it's like people want to believe, right? That was even like with Madoff, right? Where there were so many whistleblowers with Madoff that were like, dude, there's no way that the numbers that he's posting are real. But people are like, no, well, I like my, I don't even know what it was, 20% returns, like with no risk because he's writing covered calls or like whatever the fuck his strategy was. It was like the same shit with Sam. It was just much more opaque, right? Because it was much less regulated. Which is, sad, good and bad, right? Like, because it leads to, it's like, okay, we do need some sort of regulation. The thing that's scary is, does this lead to over-regulation in things that shouldn't be? Because, like, at the end of the day, like, DeFi, I think, was pretty successful, right? Like, there weren't DeFi blowups, right? Like, all the failures happen at centralized entities that is where we get failures in the traditional world as well, right? But to me, it's like, it becomes really interesting what the future looks like in terms of regulation. And I know I want to talk about that in a second, because I'm sure that that's stuff that you spend a lot of time talking about and thinking about in your position at Fireblocks, right? Like, is like, what does future regulation look like? And like, what do you think ends up happening because of all this mess?
Sure. Well, just, DeFi definitely withheld a lot better. We did have some losses on DeFi, right? Based on hacks and certain bad actors in there as well. So just want to put it out there, right? It's not 100%. It's much better than CeFi, but it's also important for folks to really try to understand what they're putting their funds into when they join different DeFi protocols. As far as regulation goes, I mean, it's super interesting. If you think about crypto being 13 years old, with Bitcoin having been born 2009, but really, like, economic activity beyond just transferring Bitcoins back and forth is maybe 6-7 years old. DeFi is 3 years old. The fact that we're speed running the book and the history of finance in such a short time really opens up, I think, good opportunities, and to your point, a lot of risks when it comes to regulation. You go back to Wall Street. I mean, it took many decades for us to get to a point where the regulation did a better job at protecting customers than having no regulation. I think the issue we have today, especially in the US, is that our regulators are governments composed by people that are quite old. And I started to see it myself, mid-30s. I look at stuff that I have young brothers-in-law that they do in like their teenage, and I'm like, what? I don't get it. And so I can't imagine, or how like a 70-year-old legislator can understand crypto or understand why we're so drawn to it. And I think that's the biggest risk, is one, the fact that our regulators, our people in government, don't really understand the technology because of their age, and two, apathy to engage with them, not from the industry. I think, Fireblocks were part of the Blockchain Association, which is one of the largest lobbying groups for crypto in DC. Obviously, when this, senators and Congress people see us coming, they're like, oh, well, they're just here to pump their backs. They're coming at us from the fact that if we regulate them, they're out of business. So there's an implicit bias. What happens when gmoney, when Sergio, when when like people, like regular users, engage with them? I think that's the difference, and we're not doing a good job of that. We're not doing a good job of really engaging from the consumer side, from saying, hey, like, crypto's better for me because this and that. Can you please take a better approach to that? Who actually does it? It's the people that are against crypto, right? Like the Molly Whites or whatever her name is, who are like constantly writing on how bad crypto is, constantly kind of like putting the industry down, constantly highlighting some of the flaws and mistakes that happen. And so I think the risk is that, yeah, we get bad regulation, but I think it's also on us as users, as proponents of crypto, as beneficiaries of crypto, to really say, okay, how can I raise my hand and really get engaged with this, regulatory body, or like, even if it's like stupid little things like writing a letter to your congressman saying, hey, this is my story in crypto. I think that as more people start to realize that we have a voice, and they start using it, we can help ourselves a little better. But yeah, regulation's coming. Sensible regulation can be pretty good. Obviously, kind of like the decentralization, crypto maxis will always argue against it. But I do think if our goal is broader, adoption, if it's really mainstreaming, onboarding, our parents, grandparents, we're gonna need some guardrails for them to not get, stuck with funds in, the FTXs of the world and the like. So it's a very double-edged sword.
Yeah, no, I agree with you, because I do think that in order for crypto to really grow, like we just need whatever the regulations are going to be, we just need to know what they are. So that way we can operate, we know what's legal and what's not legal, and we can start operating and begin innovating within that framework, right? And so, something as old as, accredited investor laws, right? It's like, I don't know, I think that's kind of unfair, right? Like, it's like, if I think that's one of the beautiful things about access to what draws people to crypto, right? And it's like getting access to like this startup that you can actually have like an impact on, right? And instead of being like, oh well, only the biggest investors in the world get access to it. It's like, well, that kind of sucks, right? And it's all only because I'm not an accredited investor. And it's like if I'm willing to take on some of those risks and I understand and I'm like financially literate, then I should, whether I'm accredited or not, shouldn't necessarily matter, right? It should be like a financial literacy test, right? Like that should be the test as opposed to a accredited investor test. But I mean, that's beyond me. I was going down the rabbit hole there, but I want to ask you first. I want to ask you two things. One is what are your thoughts on rates? Do you think we see a Fed pivot next year? What do you think that does for risk assets? And then two is, and more importantly, is how does this affect the crypto dick buck market? Because I know you're a man of math and culture, so we need to understand ultimately, because that's what this podcast is about, is what sends crypto dick butts to the moon.
All right, rates. I mean, 12 months is a lifetime in this day and age, especially in crypto. Obviously, you've seen inflation kind of start to taper off, not just in the US, but across the globe. I think that's a combination of obviously the hikes, but also the fact that we were in a late stage cycle of consumer demand. And again, everything we spoke about at the beginning, all the free money, obviously that's all, there's a chain effect there. So definitely we're going to see inflation come in. Pivot, I think it's hard to like put one meaning to it, right? Some people think pivot is just the Fed letting go of the accelerator when it comes to the hikes, which they did last week, right? So they hiked less than the previous hikes. Is that really a pivot? Is it them just pausing and not hiking for a few meetings? Is that the pivot, or is them cutting rates? I think they're gonna pause after a couple of more hikes. Maybe they do 50, 25, and then they pause. I don't think Powell can just start cutting immediately unless we really see the economy come off a cliff. Which, there's a possibility of that. I do think these things take time, as we've seen with inflation, right? It started hiking at the beginning of the year. We still saw inflation really shoot up as they were hiking. So there's not just an immediate transmission mechanism. I do expect them to at least pause for a while, reassess, and then depending on what happens with the numbers, they go meeting by meeting. We have a gigantic spending plan that's about to be voted on. If that sparks inflation again, obviously it's going to be hard for them to start cutting. So, I think I'm less cautious than I was at the beginning of the year, just because we've seen the majority of the move to the downside. And so I think that even if we do revisit the Ether lows, for example, which were like 800 from here, that's a 33% decline from today's prices versus at 800 coming from 4,800. And so a lot more optimistic about the year. I think I'm going to start to finally build back my Ether bag as we go through time. Now, what happens to the ultimate triple point asset, I think, is it's up only for dickbuds. I think dickbuds are really the best NFT you can own. I love my punks, but now they are a Yuga asset. And so there's some risk there that they just turn them into mutant punks or whatever, right? Whereas dickbuds, they're just so pure, they're so perfect, they predate crypto, they are part of internet meme culture. The community is really strong. The art is just beautiful, the vibes are immaculate. The math is perfect, right? One dick equals one butt, and there's nothing anybody can ever do to change that. So rates go up, dicks don't care. Rates go down, dicks don't care. I think that as we go through time, this is the apex predator of NFTs. And you want to make sure you at least have one dick butt, because I'm here at my mom's house in Mexico, and my nieces are 3 and 1, and I have some dick butts for them, and I can't imagine when 30 years down the road, and I'm like, maybe not in my deathbed yet, but they'll be in like their mid-30s, and they'll be like, hey, uncle, padrino, why did you not get us a dick butt when they were under $1 million? And so I hope that nobody has to have that conversation with their their kids, their grandchildren, their nephews or nieces in the future. We're like, you were around when dick butts were like 2 ether and you didn't buy at least one. So yeah, dick butts, I think they're the past, the present, and the future. And I can't stop smiling just when I think about them. And I'm so happy that you're part of the community, and there's so many like great members that are part of the community, and really people are not in it for the pump, which I think is a big difference. We go into the Discord and people are talking about memes, and it's just innuendo. Like, it's really a part where you come into the dick butt community and you're just naturally more happy. And that's kind of like the NFT I want to have in my wallet. The NFT where like you see it and you just smile. Like, it's just, how can you not smile? It's a dick with a butt with a dick on it. Like, it's poetry. It's visual poetry. So yeah.
Oh man, I love it. I love it. That was a great monologue on dick butts. I really appreciate it. I guess to add to my point on the macro is, I agree with you. I personally think the pivot is probably, I'd say when the Fed stops raising. I personally will consider that pivot. What I was much more bullish up until I think yesterday. What was it? Yes, I don't even know. My days are. I think it was yesterday or Sunday night when the Bank of Japan raised interest rates. I'm like, holy shit! I'm like, you're telling me the Bank of Japan, and I need to do more reading on it. But I'm like, if the Bank of Japan is worried about inflation, like, we are fucked. Like, we have a huge problem ahead of us. I need to read more on it because I admittedly haven't had time on it. But up until I was reading that, I was like, all right, maybe we start getting a pivot in the back half of next year, which means, the market starts discounting that a few months in advance. So maybe we get a Q1, maybe late Q2 bottom or something, late Q1 bottom or like Q2 bottom of risk in general, with a pivot actually coming a few months later. But I will say that reading that news out of Japan kind of made me like pause and being like, oh shit, like we might not be as close to up only as I thought we were, right? I don't know if you did any reading on that yet, but like, super curious on your take if you have any.
Sure. I mean, Japan's been running its own crazy macro experiment for the last 30 years. They're ahead of the US when it comes to demographics, right? They have an aging population, and so they have a little bit of a different problem, I think, than we do on this side of the world. I wouldn't read too much on it as it impacts kind of like the rest of developed economies, again, because they've been running this crazy experiment for such a long time. For me, just kind of like in closing, not just crypto, but everything that we touch, especially in the US where the consumer makes up 70% of GDP. The fact that we're going to have less activity, whether it's down 25, down 50, or down 10, but just given how much percentage the US consumer takes up, it's bound to have an impact. And so retail is a big player in crypto. Probably the largest player in the space, much more than institutionals. And so it gives me pause. That's why I want to just start accumulating. It'll be difficult to really time the perfect bottom, but you start looking at the bigger picture, right? You're looking at a decentralized computer that is becoming the foundation for the future of finance, for the future of culture, for the future of social media, for the future of regular media. And at what level does it start making sense? And you give yourself ample range when it starts to think about valuations. Does Japan matter? Yeah, it does a little bit, right? But I think the bigger picture is the fact that we're going to have presidential elections in the US in 2 years, so the campaign's going to start in a year. The Democrats obviously face a big risk both in the Senate and with the president, and I think they're going to find a way to, if we do hit come off a cliff, to really re-stimulate the economy, just like the US government was able to turn liquidity on in a second over that weekend was in March of 2019, 2020 during COVID. they'll find a way to just pump liquidity back into the system. So I'm not too worried about the externalities. I am worried about the short term, what happens when, people start losing their jobs and people can't pay their mortgage. I think it'll be short term lift. I think we'll find a solution for that, within the next 6 months after that starts happening. But I think that's going to be probably some of the best opportunities to really buy high quality assets, not just crypto, but like, some of the stocks that you and I love. We've talked about chips, large, retailers and the like, stuff that's not going to go away. And now you're getting a really, really good entry point, especially as you start thinking like, will this company be around in 10 years and will it continue to be a foundational part of my day? Just like, crypto is for younger generation and the like. So very, very exciting opportunities coming up, just a matter of being smart about them.
What you just said kind of brought something up, and we didn't get a chance to talk about it. And I've been spending a lot of time thinking about this for the last 2-3 weeks. Is like, okay, here we are talking about inflation. And I've always had this idea in my head of like, okay, I feel like with this inflationary bubble that every major bank around the world has been blowing for the last, let's say since LTCM, right? Since 1997 is really when this all really, really started. And it's just been getting more and more insane. And I feel like over the last, 30 years, 20 years, 25 years, I feel like just central banks have been waiting for some sort of evolution in technology, right? Because we all know that technology is very, very deflationary, right? Mm-hmm. Because, as we get better at processing speeds, the cost per kilowatt and the cost per computing power goes down. And, just 22 days ago, we have ChatGPT gets released into the wild. And I'm sitting there and I'm like, dude, I fucking love it. I've been like, dude, like ChatGPT do this, ChatGPT do that. I'm like, holy shit. Like not only can I've already started outsourcing, let's say my mood boards for like creative direction on like design stuff. But it's like, you're telling me now, like I can like send an email. I can create a job listing. I can do whatever it is that's out there. I can literally code without having to do any of this. Like that is so deflationary, right? And that like we're sitting here and we're thinking about inflation. I wouldn't be surprised if it, with the rise of AI and as, people keep talking about GPT-4 coming out in the next like 120 days or so, like I'm so fucking excited. I'm willing to pay for this shit now, right? Like I'm like, this is going to change humanity and it's going to be so deflationary. And I feel like the Fed and central banks and governments have been trying to buy time to find that real deflationary thing that will create this entire macro shock to productivity, right? Where all of a sudden you have a team of what used to be 10 analysts now can be, brought down to one analyst that will run everything with an AI assistant, right? And be able to do all these jobs that used to cost, let's say, $1 million in salaries and all this stuff. Now it ends up costing under 100,000 or 200,000, whatever it is, right? Like that is so deflationary that I think we're sitting here and we're thinking about, the inflationary shocks to the upside. But then also it's like, but this productivity that we're sitting on that I'm like super excited about and I'm scared, right? Because it's like, I mean, if AI can do everything better than humans, like what does this mean for humans, right? Yeah. And that's a whole nother paradox. But like, I do feel like that is something that's really being overlooked is that if AI starts going mainstream as soon as like next year, what does that mean for deflationary forces coming into the market that all of a sudden we're like, oh yeah, inflation's a thing. It's like all of a sudden it's like, wait a second, it might not be that big of a thing because people are about to start losing their jobs. People are going to start losing, it's like, what does this mean for UBI? What does this mean for like a lot of things that we thought we had as a society? Like we thought we had time on this, right? Like I thought it was like, oh yeah, like AI is coming, but like it's 10 years away. Like we have time to figure this out. Like, I don't think we do. We have to figure this out relatively soon. And it's scary. And like, also like the optimistic part of me is like, what does this mean for humanity's productivity going forward? I don't even have a question with that. What are your thoughts on ChatGPT from like a macro level? Because like, these are things that I've been thinking about is like, we're sitting here thinking about inflation, but like we have this really, really, really big possibly very deflationary event that's coming to us sooner than we thought. And like, what does that mean for like, and I know I'm asking you like this really conceptual question, but I'd just love to hear your thoughts on that.
Sure. So first, the inflation that we're seeing today, you're right. It's a hangover, not just from the COVID stimulus, but the last 25 years of loose monetary policies, mostly in the US. And obviously, that forces the rest of the world to adopt similar things. And it's a hangover. We, as anybody who spent some of their 20s in New York City can tell you, right? You can always wake up on a Saturday a little bit hungover and kill that by going out to like Labo brunch and just drink again, and then drink again on Sunday, and then just kick the can down the road. And you won't experience 6 hangovers. You'll experience one really big one by like Wednesday when you're done with like your little party bender. So that's what we're going through today. I think inflation is a sign of economic activity. That's why central banks say we want a 2 to 4% inflation every year. That means that the economy is working. That means that there's economic value being created, and that has an effect on the price level of goods and services. When you think about deflation, it's a very bad force, usually, because it just means the opposite, right? There's not enough economic activity. There's really people pulling back. If you're not spending money on goods and services, then those providers of goods and services are not receiving money, and they're pulling back, and it creates a very vicious cycle. That's why the central banks are always looking for a little bit of inflation. When it comes to AI, first of all, I'm super excited about it. I'm a big, my mom's a teacher. I grew up around the school. And so I think AI is going to really help us bridge the gap in education between, like the people around my hometown here in Mexico and those who have the opportunity to go to amazing, public schools in Europe, the US, wherever they have really good education systems. And so from that side, I'm super bullish AI. I'm super excited. I can't wait to see it change the world. But to your point about productivity and what it's going to do, I think that it's super interesting first, that it's coming for white collar jobs first, right? So like office jobs, it's already kind of done it. If you think about it, AI has already been around. You've already kind of interacted with it. When you want to change a flight on like one of the big airlines, you don't talk to a person anymore. A little chatbot pops up and you say, hey, this is my reservation number. This is what I want to do. And eventually, an AI helps you with it, or at least points you in the right direction. Obviously, that's getting a lot better. And obviously, you and I can now log into a computer and access a lot of that and harness that potential ourselves for what we wanted to do, not just like an airline company or a big corporation like that. So white collar jobs are really most at risk here versus, a plumber, right? A construction worker. Like AI ain't coming for that in a long time. And so I think it's going to be super interesting. I think it's actually going to probably decrease the wealth gap, in the sense that, obviously professional jobs. I remember being on Wall Street and sometimes thinking, well, why the hell are we getting paid this amount of money for the value that's really getting created, right? For the people that have not been on Wall Street, it is really a regional industry of the tri-state area. People who went to Ivy Leagues can break into Wall Street, but the majority of the population on Wall Street went to like Holy Cross and just grew up in Long Island, and they know somebody somewhere.
It's so funny you say
industry.
That. Yeah, it's so funny you say it, because I remember I was having a conversation with a buddy of mine who was he was like a sell side broker or something, and he was like complaining about how much he got paid or something, and we're like, bro, like you could put a monkey in that seat and they would print cash because of the seat that you're in, right? Like to your point exactly. Sorry, I didn't mean to
no, but it's true, right? Like at Goldman, the rates desk, you could literally put a monkey there picking up the phone on the rates desk and print $10 million of revenue. And so eventually an AI is going to do that. And we're already seeing it with electronic trading. Electronic trading has really taken over a lot of like the more traditional jobs, and it's left to kind of like the soft commission things you were talking about, where people want to talk to another person, kind of like be a soundboard, like give me a good trade idea, not just, hey, go and buy 200,000 shares of, Anacota Steel. And same thing's going to happen for all these other industries where humans, are not really necessary, especially very repetitive jobs. Like I love my colleagues at Fireblocks, but the sales role for the most part is doing a demo and walking, prospects through the same iteration of actions. Could we do that with like a video? Yeah. Could we do that with like a chatbot? Yeah. And so I think AI is going to come for a lot of those jobs. And to your point, I don't think it's going to be like the next year that we're going to start seeing like significant job losses directly from AI, but it's definitely an accelerator. And any accelerator has, drawbacks, like we'll see a lot of job losses, but the people that are able to harness AI and really, lever whatever they're doing with AI are the ones going to be able to capture the other side of that. And you see, for example, with like, cars and horse carriages, right? Like cars came about and like, super efficient. You can get to a bunch of places, just pumping gas, not need to like feed an animal, take care of an animal and like, right? Faster, safer, all the stuff. And the people who mass produce cars got insanely wealthy. And we'll see that here in AI. Like, how can you use AI to, to your point, content creators just pump out like really good content, or designers, or a lot of artists are like, oh, AI is coming for my job.
Dude,
maybe
it's so crazy. Yeah, it's so crazy because like I literally was just talking to somebody. I'm like, dude, when is there going to be like an AI lawyer so I can literally just draft up like my whatever it is the agreement is, and like have it in law terms and be like, yeah, this is like from the best lawyers on the planet, right? Like, and I don't have to pay $3,000 an hour to have somebody like draft up something. It's crazy. Like I think it's
amazing. It's amazing.
I love it. I can't wait for it. I think it's funny because I was having this conversation with my friends who have little kids, and it's like, well, how do and these are friends, mind you, that the last time I was talking to them, I was talking about NFTs and the metaverse, and they're like, they looked at me like I had like 10 heads popping out of my neck, and they didn't listen to me. And then literally, like, because we had our holiday party last weekend, I was talking about AI, and they hadn't heard about ChatGPT, and I'm like, bro, like, fucking go log on and like just experience it for yourself. Like, this is gonna change everything. But then we're talking about how does this affect their kids, right? And it's like, we're talking about a world where you won't necessarily need to know how to program because you're going to have an AI that programs for you, but you're going to have to be able to think critically, right? You're going to have to be able to solve those problems like in your head and then come up with the solution, even though you don't know how to technically implement it. So I think like critical thinking has always been a very, very valuable resource, I think, for humans. I think it's become it's going to be that on steroids to be like, oh, like, I mean, I think my favorite tweet of the last 30 days has been somebody was like, "This is the age of the idea guy is now upon us," right? Like, how many times have you had an amazing idea, but you're like, dude, like, I don't fucking know how to do this, right? Like, I can't make a website that does blah blah blah, and now you can, right?
Yeah.
And so I think it's gonna be really cool,
and that's
it's gonna be fun and disruptive. Yeah,
that's always been
like,
technology.
I embrace it.
There's kids that won't ever need to learn how to drive. And if you had told me that 15 years ago, I would have been like, what? Like, no, driving is like, it's actually like equivalent with like freedom and independence and like everything that comes along with it. And now there's kids that are being, like my nieces, will probably not need to know how to drive. I mean, they will, and they'll be great drivers because I love cars, but they will need to. And just to tie it all back to like, where we are, like NFTs and crypto, we are going to need to be able to validate provenance of those ideas, to be able to say, okay, well, is this AI generated? Is this human generated? Who came up with it? When they come up with it? And really, that is where AI and blockchain technology would converge. And I think that is like the big idea for the next 30, 50 years, where, okay, we have computers that can create amazing content, come up with amazing things. Let's find a way to almost like timestamp them in the fabric of humanity in a way that's completely centralized. So anybody around the world with an internet connection can go back and say, oh, you know what? And we're not talking about just because somebody minted something 2 weeks ago, but in 100 years, right? Imagine having a history book that we are able to look back 100 years from today and find the exact point. And say, okay,
exact points in history.
Like the genesis of that idea. And like, I think it's just going to unlock so many things. Technology is always scary because it can also unlock bad things. But I think, we have the power to harness AI, blockchain, and really build like an even better future as we go through time, and hopefully leave a better world behind. Because if that's not people's purpose in life, then I'm probably not living right.
Yeah. Well, dude, thank you for coming on. I appreciate the time. I feel like I could talk to you for like another hour or two. Like there are other threads that I would love to go down. Maybe we have you on back on in a few weeks or a few months or something, and we kind of go down. This was a really good convo. I always love talking to you because you always have like good perspective, and I appreciate it. I think the finance background from both of us allows us to have like a good conversation around stuff as well. So, dude, thank you for coming on.
Thanks for having me, man.
Happy holidays. Dude, happy
Feliz
holidays.
Navidad.
Enjoy. Yeah, Feliz Navidad.
Thank you so much for the invite. It's really an honor to help you close out the year of the podcast. And, congrats on all the success. It's been very inspirational as a friend to watch you continue to just, break through so many paradigms, come up with so many good ideas and continue to deliver. I know how hard it is. And I've seen it, I've seen you offline as well. And I know how much of a toll it can take, especially because you're, a disruptor, as you say in your Twitter bio, but you're also a perfectionist and the world's not perfect. So I really appreciate all the work that you do for the 9DCC community and the admin wallet community and the community as a whole. You're an amazing ambassador to the NFT space. So much appreciated.
Thank you. Thank you so much. Thank you for the kind words. And everybody that's tuning in, thank you. Hope you had a great 2022. Hope 2023 is way better. And thanks for tuning in. Thanks, everyone.